What if a crypto token is suddenly exploding by more than 800%, trading at fresh highs and attracting millions of dollars in volume? But the biggest question is not how high it can go, but whether the move is already too far too fast. That is exactly what is happening with HOOD, the Robinhood themed meme token on Solana. The chart looks almost unbelievable. The price is sitting around $0.0000054, while the screen shows an enormous 24-hour gain of more than 868%. Liquidity is around $451,000. 24-hour trading volume is above $74 million, and more than 1,400 unique traders are active in the market. So naturally, people start asking the same question. Is HOOD finally breaking out because the market has discovered something early? Or is this exactly the kind of explosive move where late buyers become exit liquidity? And that distinction is extremely important because when a token moves several 100% in a very short period of time, traditional ideas like it looks cheap or it has already gone up so much can become almost meaningless. Before we break it down, make sure you like the video, subscribe to the channel, and most importantly, leave a comment telling me what you think about HOOD. Would you chase this move right now or would you wait for a pullback? And just to be clear, this is a crypto market discussion, not financial advice. Now, what exactly is HOOD? Despite the name Robinhood, this is not the stock of Robinhood markets, and it should not be confused with the publicly traded company. The token shown on the chart is a Solana based meme token using the Robinhood theme. According to the information visible on the trading screen, HOOD has a market capitalization of roughly $5.4 million and a fully diluted valuation of roughly the same amount. The circulating supply is shown at approximately 99.9 billion tokens, with essentially the entire supply circulating. That is important because it means the token is operating in the small cap meme coin category. And small cap meme coins can behave very differently from established cryptocurrencies. They can move incredibly fast because it does not take the same amount of capital to move a $5 million market cap token as it would to move a multi-billion dollar asset. That is one reason HOOD has suddenly become interesting. Look at the trading activity. The screen shows more than $74 million in 24-hour volume against a market cap of only about $5.4 million. That is an extraordinary amount of activity relative to the size of the token. It means traders are paying attention, but high volume does not automatically mean healthy long-term demand. Sometimes huge volume represents genuine accumulation. Sometimes it represents traders rapidly buying and selling the same asset. And sometimes it represents pure speculation. That is where the technical picture becomes extremely important. Right now, the trend is undeniably bullish in the very short term. The chart shows a series of powerful green candles moving almost vertically upward. There is no normal looking gradual recovery here. This is a momentum explosion. The price moved from extremely low levels into the $0.00005 region in a very short period. And the latest candle on the screen is still showing strong upward momentum, with the displayed price around $0.0005433. So if you are looking purely at trend direction, the bulls clearly have control right now. But there is another side to that argument. When a chart becomes almost vertical, the risk of a sharp retracement increases dramatically. The problem is that there is very little established support underneath the current price. The token has moved so quickly that it has not spent enough time building traditional support and resistance zones. That means if momentum suddenly disappears, there may not be many obvious levels where buyers are waiting. The first thing I would watch is the current breakout region. If HOOD can consolidate around the current area instead of immediately collapsing, that would be a much healthier sign. A sideways period after a huge rally could allow the market to establish a new support zone. But if the token immediately starts giving back the latest gains, that would tell us the move may have been driven more by short term speculation than genuine sustained demand. And this is where ratings and signals become tricky. With a tiny meme token like HOOD, there is no meaningful Wall Street analyst consensus telling us this is a strong buy, hold, or strong sell. This is not a traditional stock with dozens of professional analysts publishing earnings estimates. Instead, traders are effectively creating their own rating based on price action, liquidity, volume, holder activity, and sentiment. And if we had to describe the current signals in simple terms, the short term momentum signal is extremely bullish, but the risk signal is equally extreme. In other words, the chart is saying buyers are here. It is not saying this price is safe. Those are two completely different things. And that brings us to the biggest debate. Is HOOD undervalued? At a market cap of only around $5.4 million, someone could easily make that argument. If the token gains significant attention, gets listed or promoted across larger platforms, attracts more Solana traders, and becomes one of the recognizable meme coins in the ecosystem, a multi-million dollar market cap can potentially become tens of millions. That is the bull's argument. The market cap is still tiny compared with established cryptocurrencies. There is room for a meme coin to grow if the community and attention grow with it. And right now, the enormous trading volume shows that there is at least serious short term interest. But now let's make the bearish argument. A $5 million market cap does not automatically mean HOOD is undervalued. It could simply mean that the market currently values the token at $5 million because there is no established fundamental reason to value it higher. That is the danger with meme coins. The value can be almost entirely dependent on attention. If attention increases, price can explode. If attention disappears, price can collapse. There is no earnings report that tells us what the company is worth. There is no predictable cash flow. There is no traditional valuation model that can confidently tell us HOOD should be worth $10 million, $50 million, or $500 million. The market decides, and the market can change its mind extremely quickly. That is why retail traders often get trapped in moves like this. Imagine someone watches HOOD go up 100%. They wait. Then it goes up 300%. They still wait. Then suddenly it is up 800%. At that point, FOMO kicks in. The trader thinks if I don't buy now, I'm going to miss the next 10 times. So they enter after the biggest part of the move has already happened. And then the momentum slows. Early buyers begin taking profits. New buyers become nervous. Volume starts falling. The price drops 20%, then another 20%. And suddenly the person who bought because the chart looked unstoppable is asking why the token is collapsing. This is how retail traders get trapped. Not necessarily because the project was a scam, not necessarily because the chart was manipulated. Sometimes they simply bought after the risk had increased dramatically. And with HOOD, that risk is very real. The liquidity shown on the screen is only around $451,000. That is tiny compared with the reported $74 million in daily volume. Liquidity matters because a market can show enormous trading volume while still having relatively limited depth. In a fast moving market, that can create enormous price swings. A few large orders can have a much bigger impact than traders expect. There is also the security side. The screen shows the security scan marking no mint as yes, blacklist as unknown, rug pull as no, and fake token as no. Those are useful signals to look at, but they should not be treated as a guarantee that the token is safe. A normal looking security scan does not eliminate market risk, and it definitely does not guarantee that the price will continue rising. Now let's look at the bull case. The best case scenario for HOOD is that this move is not just a random spike. Imagine the token continues attracting traders, the community grows, social media attention increases, and more people recognize the Robinhood themed meme. The price could then enter a new phase where every pullback attracts buyers. Instead of one vertical candle followed by a collapse, we could see higher highs and higher lows. That would be a much stronger technical structure. If the market cap moves from around $5 million into the $10 million, $20 million, or even higher range, the percentage gains could still be significant. That is why small cap meme coins attract so much attention. They offer enormous upside potential. But now the bear case. The worst case scenario is that the current move is almost entirely momentum driven. The token spikes, late buyers rush in, early holders take profits, and volume disappears. Once the height fades, the price can fall back toward the levels where the breakout began. And because Hood has moved so quickly, that retracement could be brutal. A 50% decline after an 800% rally sounds shocking, but in crypto, especially with tiny meme tokens, moves like that are entirely possible. This is also why the phrase, "it has already gone up so much," is dangerous. A token can go up another 100%. It can also fall 80%. Both outcomes are possible. So, what should we watch next? In the short term, the most important thing is whether Hood can hold the breakout. If buyers can establish support near the current trading range, that would suggest the market is accepting the new valuation. If the price continues making higher highs while maintaining strong volume, the bullish momentum remains intact. But if the chart suddenly turns red and the latest breakout is completely erased, that would be a major warning that the move was not sustainable. For the long term, the story is much less certain. Hood is a meme token. That means long term success depends heavily on community, attention, liquidity, listings, social momentum, and the ability to remain relevant. Meme coins can become enormous, but they can also disappear from the spotlight just as quickly. And that makes this one of the highest risk areas of the crypto market. So, is Hood undervalued? I would say the more interesting question is not whether the token is cheap. The question is whether the attention surrounding it can continue. At roughly a $5.4 million market cap, the upside can certainly look attractive if the community and trading activity continue expanding. But after an explosive move of more than 800%, the risk of buying at exactly the wrong time is also extremely high. Right now, the bulls have the momentum, the bears have the valuation risk argument, and neither side has a guaranteed outcome. If Hood consolidates, builds support, and continues attracting real market interest, this current move could eventually look like the beginning of something much bigger. But if the volume disappears and the breakout fails, traders who entered because of FOMO could discover that the biggest green candle was actually the most dangerous part of the entire move. So I'll leave you with one question. Is Hood just getting started because the market has finally discovered a tiny Solana meme coin? Or are we watching the final explosive phase before the crowd realizes it may have arrived too late? The next major move could decide which story is true.